Today, I want us to look at special funds in Kenya. What are they? What are some of the best performing special funds? What are their returns? What are the costs? And what are the minimums requirements for you to invest into those special funds? Now, did you know that some special funds in Kenya have delivered over 45% in 2024? That's right. Much higher than the typical savings account, or much higher than the normal money market funds. But here is the truth. Anytime you hear high returns, like anytime we're talking about investments, we talk about risks and returns. So anytime we talk about high returns, then the risks are also high. So in this video, we'll break down, we'll have a deep analysis of special funds, specifically in Kenya, what they really are, how they work, their benefits, their risks, and the top 5 funds that you are supposed to know as at now. This shall also look at, for those funds, we shall look at their returns, their minimum investments amounts, and the costs that are involved. So I will take you through a step-by-step process on how to invest in these particular funds, and should you decide if special funds are right for you. First things first, what are special funds? Now, as the word suggests, it's special. Of course, I'll explain why we say it's special. But a special fund is a type of a collective investment scheme. And take note of the word collective investment scheme. And this basically implies that it's a pool of money that has been put together from different investors, and they are managed by an individual person known as a professional fund manager. Now, unlike traditional funds that normally stick to a safe assets like treasury bills, like money, like treasury bills and bonds, special funds normally target non-traditional but high-yielding investments. For example, real estate, commodities, currencies, and other derivatives. Now, but why are they called special? Where they invest is one of the reasons why they are called special. And so they are called special because, reason number one, they are different from traditional collective investment schemes. For example, normal funds like money market funds, equity funds, and balanced funds have got a very well balanced and defined conservative strategies. There's somewhere they will invest, and there are some other and there are some other avenues vehicles they will not invest. But when it comes to special funds, they don't follow that route. They have got other avenues where they invest, and they are not as rigid as other normal funds are. Reason number two why they are called special funds is that they target a specific group of investors. Special funds are usually designed for a special group of investors who have got a common interest. For example, people who can tolerate higher risks, or people who want to diversify beyond the normal assets, people who want to diversify beyond money market funds and beyond the treasury bills and treasury bonds. Reason number three why they are called special funds is because flexibility in the strategy. Special funds can take concentrated positions in certain sectors or instruments, unlike normal traditional funds that must stay in broadly diversified vehicles. This enables them to have a very eye-catching or high payout. It's because they are that flexible. They are flexible to check out the market and realize that a particular investment vehicle has got a higher returns, so they go and invest in that particular vehicle. Then the last reason why they are called special funds is because of the high risk return profile. Now, they are special because they sit outside the normal categories of collective investment schemes, and this is because they come with a higher potential reward. Look at this. Money market funds are giving returns of between 8 to 12% per annum, while special funds can go all the way up to 45.8, as we shall see in the performance in the last couple of years. So, in short, they are called special because they are special purpose vehicles that are specifically designed to fund managers to allow higher risk, higher yield investment strategies for a selected class of investors. So that's why they are called special. Now, anytime you hear money, it's always advisable to look at, is it regulated? So throughout the investment that we have in Kenya, special funds are regulated. They are licensed, regulated, and monitored by the Capital Markets Authority, CMA. Now, Capital Markets Authority gives them these orders that for the fund to run, it must have the following. It must have the fund manager who makes investment decisions. It must also have the trustee, from the word trust, who ensures that the fund follows the law and protects you and me, the investor. Then number three, we have got the custodian, normally a bank, and this bank ensures that it holds the money or the assets safely. These three people, these three entities, they make sure that the fund is accountable. They add a layer of accountability, a layer of oversight, and a layer of security so that the funds are not unregulated schemes. Why do people invest in special funds? Uh, People invest for different reasons. People invest for growth, people invest for security. And so, why would someone opt to invest in a special fund, a fund that will give higher returns, but at the same time it has got higher risk? So, people choose special funds for four main reasons. Reason number one, they are professionally managed. We've talked about the fund manager, the trustee, and the custodian. These are the professional managers that handles they handle they have got experts that will handle research, that they will handle trading, and the bank that will ensure that the assets of the funds are safe. Reason number two why people invest in special funds, because of the higher returns. They have got high returns, they've got potential of paying out 20%, 30%, and even 40 plus percent, as we shall see uh, in the past few years. An example for special fund that has paid 45 plus something percent. Reason number three why people invest in special funds is because of diversification. To break away from the normal investment vehicles of bills, bonds, money market funds, land, property. So it gives you another opportunity to diversify your investment portfolio. And then reason number four why people invest in them is because of the regulation by CMA. So the CMA oversight and trustee monitoring offers investor protection to make sure that the funds or the money that you invest with the special funds are secure and safe, and it's not just any other scheme that will run away with your hard-earned cash. Now, this sounds great why people will invest in them, but there's also the other side. Whenever there's rewards, there's always risk. So, what are the risks of special funds? Any investment that you choose to go with has got a risk. No investment has got zero risk per se. And so these are the risks that are associated with special funds. The first risk is a liquidity risk. Now, some assets, remember we've said that sometimes special funds will be invested in real estate. And real estate property is a property that you just can't wake up today and sell and get the returns quickly. And so liquidity risk is one of the risks, because assets like real estate are hard to sell. So you can't easily convert your investment to cash whenever you want. That's why special funds have got what we call, most of them have got what we call lock-in period, and a minimum of 6 months. We shall look at them once we reach there. Then risk number two, we call it credit risk. This credit risk implies defaults by borrowers. Borrowers can default or institution can default, and when that happens, it is a risk. Then we have got forex risk. Currency always swings. Today the dollar is at 139, 130, tomorrow is 128, the other day is 132. So those fluctuations affect the global investment. Finally, interest rate risk. Now, the rising and falling of rates can drag the performance of the special funds, and this is attributed as to being one of the risks that are involved with special funds. So, yes, the returns can be exciting. Yes, it can pay you to 40 plus percent, but you must be comfortable with the risks that are involved while investing in the special funds. These are the five common. I'll actually share six. These are the six common examples of special funds in Kenya and the performance between 2023 and 2024. Now, the first one is Kuza Momentum Special Fund. This is by Kuza Asset Management. Number two, we have Zemele Balanced Fund. This is by Zemele Asset Fund. Then you have got the OC Special Fund by Faida Investment Bank. We have got the Manta X by Standard Investment Bank. Then we have Old Mutual Special Fund. Then we also have Etika Money Market Special Fund. So these are the common ones currently. So I want us to go through each one of them and just have a brief overview of the returns, the minimum investment, the minimum top-up required, and the lock-in period. First things first, the Kuza Momentum Special Fund. Now, in 2024, the return for Kuza Investment Special Fund was 45.8% net of fees. The minimum investment required for you to invest in Kuza investment is 100,000 Kenyan shillings. The top-up is bundles or bunches of 50,000 Kenyan shillings, and it has a lock-in period of 6 months. This means that once you invest your money in that particular fund, you can only withdraw after a period of 6 months. The second one is the Zimele Balance Fund. Now, in 2024, it had a return of 41.8%. The minimum investment is only 100 Kenyan shillings, a very low entry point. And then it does not have no strict top-up minimum, and then open-ended withdrawals. Essentially, it doesn't have a lock-in period, like you can withdraw anytime. Fund number three, the OC Special Fund by Faida Investment Bank. In 2024, it had a return of 29.4% net return. It has got a minimum investment of 500,000 or half a million. The top-up is 50,000. Then the lock-in period is again 6 months. You realize that most of them have got a lock-in period of 6 months, apart from Zimele investment. Fund number four is the Manta X, managed by the Standard Investment Bank. In 2024, Manta X had a return of 19.5%. In 2023, it had a return of 18%. So you realize that with Manta X, the returns normally vary between 18 and 19 and 20, around there. Now, it has a minimum investment of 250,000 Kenyan shillings. And again, the lock-in period is 6 months, a lock-in period of 6 months. As I explained earlier, you can't withdraw your money before that particular time. You can't make a withdrawal request before that time elapses. Then we have got the Old Mutual Special Fixed Income Fund. And then, as I also mentioned, we have got the Etika Special Fund. Now, Old Mutual Special Income Fund is designed for investors who are seeking exposure to fixed income but higher yields. The returns may vary, and this will tend to be lower than much the more aggressive fund that you have talked about. And it it doesn't specify the minimum investment, but those are things that you can always check out online. So by the closure of 2024, that is uh, 2024, Kuza was the one that led the pack by 45%, with the 45%. And then those others followed as we have broken them down. As I've said again, or mutual is a bit conservative, but you can always get their rate from the company website, or you can just give them a call or visit them. How do you invest in special funds? If you're interested in joining, this is a short step-by-step process on what you can do. The very first thing is always research. Research the fund to understand how it has been performing. And you do this by reading the fact sheet. Every investment fund has got a fact sheet. A fact sheet is, yeah, like a one-page summary document that will show you the performance of that particular fund, whether it's a money market fund, an equity fund, or a special fund. On the website, any company has got a fact sheet that will show you the performance. So the research will enable you to see the performance. After the research, familiarize yourself with the requirements. What are the minimum investments required? For the Melia, we said it's 100 shillings. For Oak, it's 500,000, so they vary. Then open an account. This involves filling out the form, providing your identification, your KRA PIN, and the proof of address. Then you fund your account. You can do that via bank or via M-Pesa. Then from there on, now you just have to keep a track of your investment. Most funds, most investment vehicles will always send monthly or quarterly reports, but some have got online dashboards where you can, anytime you can just log in and check how the performance has been. And then plan for liquidity. Remember that most of these special funds require a 6-month lock-in period. So don't invest money that you might need tomorrow. Don't invest money that you might need after 1 week or after 1 month, because the lock-in period is 6 months for most of them. People have been asking, like now, which is the best special fund in Kenya? Going with the returns for the last year in 2024, Kuza Momentum had the highest. But also, we say that the best fund depends on your risk tolerance and your goals. And then the risks, we have talked about them. Now, who should consider investing in special funds? A special fund might be right for you if you already have an emergency fund. We always say that an emergency fund is a kit that you should always be having. So you've already set aside an emergency fund. Then you can handle moderate to higher risks. Then you want diversification beyond traditional assets. So if you tick all those 3 brackets, you have an emergency fund. You can handle moderate to high risks, and you want diversification beyond traditional assets, then it's high time that you consider special funds. But it's worth noting that special funds are not ideal if you need quick cash or you can't afford to lose your principal. We said that it's a risk. Now, in summary, this is what we've talked about. We say that special funds will give higher returns, but they have got higher risks. We have also said that special funds are regulated by CMA, and then they are managed professionally, but due diligence is always required before you start investing in them. We have also said that another takeaway, the minimum investment will vary depending with the fund. The Mele has got 100 shillings minimum, and Oak has got 500,000 at the minimum investment. This is an investment tip. Don't put more than 10 to 20% of your portfolio into a single special fund, because of the risks that are involved. So, uh, are special funds worth it in Kenya? That will entirely depend on your goal and your risk tolerance. So, uh, we'll talk about other types of funds in our next video, because that's some questions that we've been getting. So we'll talk about that in one of our other videos in future. So thanks for watching, and I'll see you in the next video. Until then,